Hello dear traders, I entered top 5 best traders in the world according to the Robbins World Cup Trading Championship in which Larry Williams participated in. This year I started this competition which began on June the 1st and I really excited and honestly very happy to see my results in this list today. During this competition, of course, I used the same methods and tools of volume analysis and order flow analysis which I give in my market forecasts and morning Sunday reviews. So if you're interested in methodologies that work today, not 30 or 50 years ago, you can subscribe to my Volume Trader YouTube channel and I will be very appreciated to show you and to teach you the methods that I use in my everyday trading. So traders, you are welcome. So let's start our Sunday market analysis, and that week was really amazing. It was very volatile, very liquid with a lot of movements, and I want to discuss the most interesting imbalances which happened by the end of the week and how we can use these imbalances the next week. First of all, let's look on SP 500. Really, I never saw such big activity in options, and traders were scared and could not understand to which direction put their bets. As you see on the chart of volatility index, there were no before such splashes of uncertainty, as you see on this chart of volatility. But this week, traders used options very actively. And as you see, by the end of the week, we closed below very important structure, support, and HFT's very huge tick chain was created here. The imbalance of bid ticks is 78%. So I assume traders that after this strong sell delta, these tick imbalances, the market can bounce back from the beginning of the next week, and we will see that it will return to this range. Very often we can see ranges in that places where traders really expect the movement to the downside, and other part of traders expect the movement to the upside, and they are very sure in their bets. So there is no reason for market to go somewhere, because the market needs all the traders to go to one direction. The market is the market maker. He took liquidity and then the market goes to another direction. But if one part of traders buy and another part of traders sell, the market stays in range. So let's see if my logic is correct the next week. What about COT data? Here we see that hedge funds went long, and if we look on open interest, it increased by 11%, so traders really add to their positions. The next asset I want to show you is Japanese yen. We saw a very peculiar squeeze on Friday, and after such squeeze, to my mind, it is high probability for Japanese yen to make a pullback. For now, I don't see the reason to go to the downside, but unfortunately, if to enter this position, the stop loss will be too far from the entry point. So maybe if the price go a bit lower, we can enter with the best risk-reward ratio in this position. The better risk-reward ratio for now can be in Canadian dollar, because imbalance is directly on the level, and when the market will start to return, we have a possibility to enter this position and to wait when the price make the movement to the upside and continue to range in this area. Also very strong tick imbalance with the bid preponderance 82%, and also the previous COT report shows us that hedge funds significantly increased their short position. As you see, they had
minus 2,600 contracts, but increased to minus 27,600 contracts. Almost 1k percentage short position was increased. But as you know, when such panics happen, market often does not go to that directions. What is also interesting, traders, that for the first time during this period, last months, there is uncorrelation between dollar index and some pairs. Because of British pound went significantly to the upside, and as you see, and Canadian dollar and Japanese yen and Australian dollar and to the downside. So we see that dollar index goes to the downside, and Canadian dollar also goes to the downside. Really, for the last time, it is a rare situation. That's why maybe who trade pairs, it is possible to find entry points to short British pound and to long Canadian dollar. But of course with stop loss, because they can continue to diverge. So be very careful in these situations. Also, traders, I want to show you the situation in US Treasuries. What do we see here? Very strong movement to the downside, and now we bounced from the mirror level, and we see this range on the lower time frame, and also we came to the lower boundary of this range. And I assume that from this imbalance also we can see some pullback, but then the market is able to proceed following. Like here, you see that market came to the previous high and made a pullback and then broke this structure. So here we also can see a market that bounced back, will break, go to this very important structure support. It is here, and from here it will make more stronger pullback. So traders, as you see, this is my plan for the next week. With the help of tick data, order flow analysis, volume analysis, we have much more concrete picture, and our actions can be based on objective factors. So traders, look inside the markets and write in the comments section what do you think about Canadian dollar, US Treasuries, about Japanese yen, what do you think about SP 500. I will be very appreciated to communicate with you. So traders, have a nice week, and see you on the other side the next week. Goodbye.